Welcome back. You're watching Chartbusters. The stock on our radar is Karnataka Bank, mildly lower in trade today on account of their fourth quarter numbers, where the loan growth was the lowest ever in the history of the company. But beyond the loan growth, let's talk about the balance sheet as well as the asset quality of the company. We have Mr. Mahabaleshwara NS, the MD CEO of Karnataka Bank, joining us. Thanks a lot, Mr. Mahabaleshwara, for joining in. First up, if you could tell us, what proportion of your book is under moratorium right now, and which segment is likely to hurt most or turn into NPAs going forward?
Yeah. Before answering those two questions, yes, definitely I will answer. I will also highlight some of the points of the current quarter performance. You know that in spite of uncertain economic conditions and challenging times, especially at the fag end of the current, Q4 of the FY20, Q4 turned out to be an eventful quarter for us, as could be seen from the increase of operating profit by 20.76%, NII also up by 10.07%, other income also up by 50.54%, wherein fee income was also moderate at 15.05%. Total income up by 14.14%, and most important thing is other expenses, especially we call it as the miscellaneous expenses, it was down by 14.81%. As rightly noted down, the slippages has also come down from 402 crores to 304 crores with a slippage ratio of 0.57% versus 0.84%. As a result, our GNPA is also sequentially down to 4.82% from 4.99%, and NNPA is also down to 3.08% from 3.75%. Significantly, the provision has gone up by 31.39%, and hence the credit cost also has slightly gone up. But most important thing is PCR, which was at 58.45%, has now improved to 64.70%. As regard to moratorium book, so by value, around 46.62% of our loan book is under moratorium now. They have availed this benefit. So that means 46.62% of the value. And by customer number, it is 34.67%. You had also raised another important thing that loan book, the growth is under 4%. Here, the most important thing is, in the past also I had mentioned, we have been realigning our credit portfolio by focusing more on the retail and mid-corporates. So that means retail is up to 5 crores and mid-corporate is in between 5 to 100 crores exposure. So accordingly, in the retail loan book, the growth rate has been 11.07%, whereas mid-corporate loan book, it has grown at a rate of 11.14%. And significantly, the corporate loan book, that is more than 100 crores, it has shown a degrowth of 8.87%. So as a result, the overall loan book growth, even though it is at 4%, there has been positive traction in the targeted areas. So another thing is the CASA has also slightly gone up from 28.06% to 28.91%. So operating profit was very good, and as a result, we focused more on provisioning in further strengthening the balance sheet. So that is why net profit is at a moderate level.
Okay, all right. Mr. Mahabaleshwara, thanks for detailing all those numbers. A couple of questions now. As you just said, in terms of the loan growth, there was a bit of a degrowth in terms of larger customers, and the smaller customers, there was a growth out there. Now, going ahead for FY21, what kind of a guidance can you give? What kind of targets have you all set for Karnataka Bank? That's point number one. And the second factor is, as you said, your CASA has gone up a little bit. Cost of borrowing will come down? Where do the NIMs head from here?
Yeah. Cost of deposit, the last quarter it was 5.97%. It has come down to 5.88%.
Okay.
Going forward, this cost of deposit would further come down because we have further reduced and rationalized the interest rates.
Correct.
Yeah. So, and as far as the future outlook for the business and all, I think considering the special conditions that is prevalent right now.
Yes.
So it may not be that appropriate for us to give the outlook right now, because we are definitely entering into an era of uncertainty.
Absolutely. Right. But Mr.
So
Mahabaleshwara,
we will be focusing more on extending the relief packages of the Reserve Bank of India.
Got it.
That will be our priority. So most probably by the time next month when we announce our first quarterly result, we will be coming out with the outlook. But one thing what we have made up our mind is, this quarter, because of the entire economy entering into an era of uncertainty, and hence we have to be very cautious and conservative. And for me, top line is vanity and bottom line is sanity. So conserve and consolidate. That is our guiding principle.
All right. Okay, conserve. So in that case, if you could give us some sense of what sort of credit cost are you, likely to incur in FY21, and what sort of recoveries have you seen in this quarter so far?
Story is good. See, my gross slippage, as I said, it stood at 304 crores vis-a-vis 402 crores corresponding previous quarter. So that means slippage ratio has also come down from 0.80% to 0.57. But on account of increased provision has gone up by 31.39% as the operating profit was good, and as we were determined to improve the PCR, we increased the provision also. So as a result, the credit cost has gone up from 0.40% to 0.50% during this particular quarter. Going forward, since our PCR is at a comfortable level, credit cost would definitely get further moderated. And we are keeping a close watch on the quality of the loan book also. See, net NPA has come down significantly from 3.75% to 3.08%. So going forward, I am optimistic that we should be able to have a very healthy loan book.
okay, all right. The credit costs will moderate. So what could that number be? And also your NIMs for the past quarter.
No, those numbers, see, for the current NIM is at 2.86%
Yes.
as against the 2.87%. So
On a year-on-year basis.
Yeah, on year basis. So we will be focusing on those areas, especially the retail and the mid-corporate areas. For example, housing has given us good growth during the last year. So that would continue to be our area. And now there is a very good demand for the agriculture as well as general gold loan. So that book is showing a very positive traction. And we will be focusing more on agricultural infrastructural activities also. MSME as because of this central government package, there is a very good possibility of security, 100% security guarantee scheme of the government of India. So that is, I think there is very good possibility and good inquiries also there. But one thing what we have been seeing is it is some this risk averse attitude among the borrowers is also being seen. So because of the COVID-19 pandemic uncertainties, borrowers have also become more alert and vigilant, and they are also keenly watching what is the development that is happening and all.
Okay.
So some sort of risk averse is also being seen. Let us see what are all the stimulus package and other things come. I think once the economic activity picks up, these things would get settled down.
Okay, all right, Mr. Mahabaleshwara. Thanks so much for stopping by and giving us your take on how things are moving ahead, and also wish you the best. At the end of the first quarter, as you said, you'll be able to give us better guidance for the remainder of this year. Appreciate you joining us. Well, let's focus on some numbers that are expected today. Titan's the one that will